Good morning. For Traders Exclusive, this is George Tkaczuk with RCM Wealth Advisors reporting to you from the CME Group trading floor in Chicago. What I'd like to do is talk about the equity markets. Now we might sound like a broken record here, but the uptrend continues. In fact, breadth continues to expand, and that's a really good thing. Now, as the market keeps running, we're going to get pulled back somewhere in the range of 3 to 5%. That would only be normal and not the end of the world. So far, we're not seeing any indication of that. And the market's actually not getting parabolic either, meaning it's just continue to trend. We get a little bit of stalling, a little bit sideways action, and that's really positive action. Now, you don't want to chase stocks there's a lot of good stocks that are extended. Stocks like Alibaba, symbol BABA, Tesla, TSLA trading over 500 now, Apple well over 300, Microsoft doing very well. So you don't want to chase those stocks, but if you are going to put on any new trades, probably a good idea to look at some things that are just making returns off the bottom, just because that gives you a lower risk entry at this time. Or you can just sit on the sidelines, wait till we get that correction, maybe 3 to 5%. So in the S&P, first signal would be below 3,200, or it might even go to 3153 at some point. That's a 50-day moving average. NASDAQ, we're looking to see if it can stay above 9,000. It's well above that now. And of course, if it gets down to 8,700, that's a 50-day moving average. That tell us, okay, that's maybe where it may pull back to. But so far, there is no sign of that. Now this week we start earnings week. A lot of financials will report, stocks like JP Morgan, Bank of America, Citigroup, Goldman Sachs, Morgan Stanley. They're all reporting this week, and it's not so important what they report, but just what the market's reaction is going to be to that report. And let me tell you how the market, whether it's just going to continue to grind higher or make some pullbacks. Now, one trade we did do this morning where we're trying it off the bottom is CrowdStrike, that symbol CRWD. Now, it's not a trade recommendation. You should always consult your financial advisor. This trade's for you. But basically had a high volume close at about the 55 area, and it's held that area after it bottomed. It's above the psychological $50 value. So we're looking to see if that can move higher. If it can't hold the 55 area, that may be your stop area. So that's about 4 to 6% away. Depends where the stock's trading right now. So that's just something you might want to consider and look for trades that are turning off the bottom instead of stocks that are running or extended, or those extended ones you wait till you get a pullback to the 20-day or 50-day as the uptrend continues. But as always, let price and volume be your guide. We'll take a look at earnings, see how the market reacts to earnings this week, and that'll tell us how we're going to be going forward. So as always, let price and volume be your guide. This is George Tkaczuk with RCM Wealth Advisors, reporting to you from the CME Group trading floor in Chicago. Have a great trading week.